Hey there, Slopers. This is Tim Knight, the voice of reason in a world gone mad, here on Friday, although I probably won't post this till Saturday morning. Um, as before, I'm sorry to say that I don't have like some nice script laid out, so this might be a little bit stream of consciousness. I just wanted to talk a bit about this week. It was a wonderful week, the best week I've personally had in many months. Um, as I've been saying for a while, the market has been feeling right again. It's been working right again. It doesn't have to go down for me to feel good about it. I felt terrific about the market on Thursday when the Dow was up 200 points because I expected a bounce. And it feels good to be able to look ahead and have what you see actually materialize, whether it's up or down. On my screen here is the VIX. This is a 20-day line chart of the VIX. As you can see, we bottomed back on the 21st, almost getting back into the teens. This shows how complacent the market had become. Wow, do things change fast. This has exploded over 50% higher in a very short amount of time, particularly today. So our old friend fear is back. And I think fear is going to be here to stay for a while. Now, let's talk about a couple of items in general here. Let's turn our attention to the E-mini. I'm going to change this back to a bit more of a standard bill of fare. Change this back to an open, high, low, close graph. Now, this is the trend line and it's broken. Somebody had commented on my last video how I'd got the trend line wrong. No, I didn't. I'm very good at trend lines. I've been doing this for a while, so I don't know who that was, but they were basically looking for the market to explode higher this week. It's a big market. There are a lot of different people, and there are as many different opinions as there are people. I'm pretty good at charting, and I'm pretty good at trend lines, so I don't know what they were thinking. But no, my trend line was fine. Thanks for asking. In this instance, it broke here on the 27th just by a little and continued that drop the next day. That was Wednesday. And this is just textbook beautiful. Just tears of joy sort of thing. It pushed back, almost kissing the underside of the broken trend line, and then today fell hard again. Absolute poetry in motion. Very much the same can be said for the GDX. We see here that it actually broke a little bit before. This broke on the 26th, which I guess was Monday, and tried to hold itself up. Fell hard on Wednesday, fought back on Thursday, and fell again today. Now, I will say to our gold bulls out there that I'm pretty impressed with how gold held it together. This is a pretty good performance on gold's part, because let's face it, looking at the euro, got hit hard today. Hasn't broken this trend line yet. That's kind of the next thing that needs to happen. But the euro got hit hard. The US dollar, looking here at the US versus Canadian, had a fantastic day. Look at this. The US dollar versus the Canadian up 1.64% on the day. So the dollar is going gangbusters. And in spite of that, gold only dipped a little tiny itty bitty bit. So if I were a gold bull, I would be pretty proud of this, because it speaks well toward the resilience of precious metals in the face of a falling dollar. The pattern before you could be construed as something pretty potent for an upside push. As far as my own positions in precious metals right now, let's see, I covered my GDX, and I have still a decent sized position in XME, which is the metals ETF. But I'm not. Listen, I've got 202 bearish positions. I think I don't even know if any of those are precious metal bearish right now. Maybe one. I guess XME is the closest one you could say. So I love trading precious metals kind of on a 1, 2, 3 day basis, but I don't really have any strong passion about gold one way or the other. What else is going on? I guess what's mainly going on is that I'm in position on the short side. I do, as I said, have some bullish plays. Just kind of thumbing through these right now. I've got 8, which is just kind of a spit in the ocean compared to the 202 bearish positions I've got. But you can see these by and large have similar patterns. They've got retracements back to a pretty nice breakout. And the last one here is Tex. So that's my kind of pathetic offering of the bullish plays. Tex is taking a while. There we go. But other than that, it's all bearish stuff. So what happens here? What's going to happen next? Well, I'm only talking about this. It's the market. As I'm saying this, the market just closed an hour or two ago, so I haven't really had time to process and digest this and sleep on it. Some people are looking for some kind of crash or something like that. No one can really ever call a crash. I'm not expecting one, but whoever does. If it does crash, I'm awfully well positioned for it because I've got all these shorts. But I've only got about 20% of my buying power deployed at the moment. I do think the top is in. I really have trouble envisioning a situation where we push to new yearly highs. That seems really, really, really unlikely to me, given the psychological damage that's taken place. So this 1120 and 1200 and 1300 figures on the S&P, I don't know where those are coming from. I wouldn't be that surprised to see some recovery. I'd like that. In the way I'm positioned, the way I'm planning to trade this is what I would love to see is recovery, hope, disappointment, lower low, recovery, hope, disappointment, lower low, and so forth. Just rinse and repeat. A grinded out lower lows, lower highs kind of market is relatively easy to trade. A spasmodic market is not. I'm not interested in that. It's too much work. So looking at this chart here of the diamonds, DIA, you can see here that this kind of band I was following, which I've discussed in prior videos, we're well beneath it. The bulls did a nice job pushing us to the pretty arbitrarily drawn band, but to the tippy top of that band, and then it fell. And the idea of us kind of trying to push our way into and even a bit beyond that band is just great by me, because I think it's all part of the process of erosion. Here's the final thing I'll say. I'm kind of a big fan of the truth, and I'm a big fan of businesses that turn a profit the old-fashioned way. And 2009 is a year immersed in falsehood. The kinds of so-called recovery you're seeing, the green shoots and the bailouts and the cash for clunkers and the homeowners credits, this is all BS. It isn't real business. And the GDP bump you saw in Q3 was kind of the one flash in the pan you're going to get from all that. It's over. And I think we're in for a long, multi-year bear market, and it's going to be really ugly. So, on that happy note, I'm delighted with how the week went, and this is a fascinating market to trade. I hope that my good slopers did well too, and let's rest up for another week again. See you, everybody.